Hello everyone. A very good morning, good afternoon, and good evening to all of you. This is your host Vaibhav. In today's session of this talk, we are going to cover the earnings report for the IBM, which recently released its first quarter earnings for the fiscal year 2024. Its results have been good. Its forward guidance is also on the positive side, and if we see the price action in the share price of the IBM, it has been mixed bag after having touched its new swing highs in last few months. It has been consolidating with not much to show in terms of the price movement, and I think after having reached this new high, it is simply taking a break, simply taking a breather, and in due course of time, it is possibly likely to start to rally again because it has taken steps to ensure that the company profits from this new wave of generative AI. It is positioning itself as the key player in the market by offering to provide the various products related to the generative AI for the enterprises to make those companies well versed in the use of AI and to be able to use them for their businesses. So it is offering the services and the software products to those which are having faith in the IBM's abilities to deliver. Now we head to the first quarter earnings. It has also gone for the acquisition of the HashiCorp. This is also for the improvement of its abilities in the hybrid cloud and AI-driven technology landscape. If we consider the key highlights, the revenues have gone up just in low single digits. Its revenues, total revenues stood at $14.5 billion, which is up only 1%. Software revenues were up 5%, and the consulting revenue remained flat. There was not much of a change. Infrastructure revenue were down by around 1%. So these three key segments are contributing to the cumulative growth, but only one segment, software, is having decent numbers. Otherwise, its revenues are more or less stagnant. To get a clearer picture of the company's earnings, we better look at its operating income. This is the comparative financial result. In the 3 months ended March 31st, 2024, we have the total revenues at $14.46 billion, which is up in comparison to 14.25 billion a year back. The gross profit is not much different. Then comes the total expense and other income. Total expense is also on the higher side in comparison to the last year. Here, the changes are there to see in terms of the income from the continuing operations because there is substantial rise in the net income this time around in comparison to the income for the March 31st, 2023, when it had brought in the net income of $927 million, but now the income has risen sharply to $1.6 billion, even though the revenues are on the similar footing. There is coming the rise in the expense as well. This is coming from the benefit from provision for the income taxes that has been the key factor which has pushed its revenues by higher of around $500 million. Otherwise, its revenue would have been in the ballpark of $1 billion only. Not much of a change in comparison to the last year. In the balance sheet, we are not really going to go into the details. Let us analyze its cash flows. The company was able to generate quite a good amount of cash from the operations, where it brought in US dollar 4.16 billion, which is around 10 percentage point higher in comparison to the last year. Cash used in investing activity has reduced significantly because this time around there is less investment in the marketable securities, and as a result of that its net cash use is lower. The cash provided by the financing activity is also on the lower side because there has not been much issuance of the debt. Its issuance of the debt net of payments proceeds is at $3.38 billion, and dividends payout came in at $1.5 billion. Total increase in the cash by financing activity is at $1.87 billion, and in total we have the cash increase by $1.67 billion, which is mainly attributable to the new issuance of the debt. So the company wasn't really able to generate much cash so as to be able to increase its cash pile only on account of the operations. It has to borrow from the market to keep its cash profile healthy. Overall, it managed to have its cash position in a comfortable situation by borrowing from the market. So there is a mixed bag result. Its operations are doing better, but only slightly. There is not much of a change in the revenue. There is not much of a change in the net income either. The rise in the net income is simply because there has been benefit because of the taxes, income taxes, and that is why it is inflating the growth in the net income in a comparative term. Now we head to the JForex 4, the trading platform from the Dukascopy Bank SA. Here you will see that after having rallied from around the levels of 120 to 200, the IBM has gone into a corrective zone, and for the last few weeks it has been hovering close to 170 mark, and I feel it is not overtly bearish. It is simply taking time. It will spend some time in consolidation phase, and if it doesn't really deep further, then in that case I think in course of time over next few months we are likely to see it rallying again. But for that it is important for the market participants to see IBM consolidating close to 170, 180 mark, and not declining further from the current levels, because if it spends a couple of months in this consolidation phase, then we can rely on it to deliver another rally in coming times. Maybe in second half of this year we will see it rallying to newer high by eventually rising past the immediate swing high of 199. So that possibility remains strong, but for us to profit from that event we first have to ensure that it is not in a bearish zone, it is not in a corrective zone in near term, and the best way to do that is to wait for it to consolidate first for at least the next few months, and then eventually we can take our bet, because after having rallied strongly it has simply taken a breather. It is in a consolidation phase, and I don't really feel there is much of a trading opportunity at the moment from the long term. Simply we will have to see how things unfold over next few months, then we will be in a better position to gauge for the newer market opportunities in the long run. Now, if we change it to the daily, we have this sharp decline after the results were announced. This gap down happened, which took away almost around 10 percentage point valuation from the company, but it has stabilized around these low levels. It is not really declining now, so that's the interesting case, and we will have to see how things evolve from here onwards. Because if it continues to remain in this declining phase and makes further low on the southern side by dipping below 160 towards 150, then I feel the momentum is going to remain bearish and we can adopt sell on rally approach. But if over next few weeks it shows the signs of finding support closer to this 160 mark, then if and when it starts to make high highs and higher lows, we can go for newer trading opportunities on the long side as well. So in the medium term, having seen it decline sharply post the results announcement, it is finding some support closer to its immediate swing low. And in this scenario, it is interesting to see how things evolve from here onward. In the short term, the things have been bearish. It found these dead cat bounce from the levels of 160 and went on to rally towards 175, but it has given up those gains really sharp. It is now back to where it was after the announcement of its quarterly earnings. In this scenario, I think we have to wait for next few days because it is still in a bearish phase in the short run, and much depends whether it is able to find consistent support on the lower side and starts to make higher highs and higher lows. For the time being, it is consolidating after having seen sharp decline, and this might be even the preparation phase for further decline. So watch out for the price zone, price moves around 170. If it doesn't rise beyond 170, I think it is likely to decline again below 160 in coming days. So in the short term, it is in a bearish phase, and unless there is any significant change in its price action, it is likely to do so. So we have to be in a position to take advantage of the situation by keeping an eye on its price moves. And as I say, the price level of around 170 is going to be key. And as long as it remains below that, it remains in a bearish phase. But if it rises above that and in the next corrective phase, its swing low is on the higher side, then we will have the change of course with higher highs and higher low formation. And in that eventuality, we can count on it to recover towards the immediate swing high, if not further. So see how price action evolves over next few sessions, and you will have much more clarity on that front. Now it's time for me to sign off for the day. If you have any query or any idea to share, do write to me in the feedback and I'll be more than happy to take the discussion forward. Thank you all for joining in. Have a fabulous time ahead. See you next time around. Till then, goodbye.